How you guys doing today? Welcome back for our last lesson for technical analysis. Now the next section is going to be a whole butt ton of TA as well. But for our cornerstones and for our stepping stones of technical analysis, this is going to be it. What we're going to talk about in this lesson, lesson 19, is realistic goals. And where you should go from here. So we've established quite a lot with technical analysis. We've established supports and resistances. We've talked about all the great things that come with them, like how to be clear with 3 hits or more, never less than that, and how we can make channels with them. Then we discussed channels and how a channel should have 100% success from support to resistance and resistance to support. Now it's not going to be perfect, but the better you can get it, the better. We then talked about trend lines and the same exact thing as support, so you make those into channels as well for some extra success and some extra hits. Then we discussed volume profile. We'll discuss that again with realistic goal setting today. Then we discussed patterns. Our main ones are channels, wedges, and also triangles. We'll go into those one more time and show where we can improve on that. Then we talked about historical data and how we can look at reversal times, top to top, bottom to bottom, all these types of things that kind of put in perspective how we can plan reversals and see how reversals are coming and be more successful in our entries and our exits, which again we'll talk about later on more in depth. And then last we talked about convergence. We bring it all together, right? We have support, resistance, trend lines, patterns, all these things, volume profile coming together into one good entry, exit, or play. So today what we're gonna do, we have right here a Lego bottom. Now this right here should represent risk management right here. Now again, I could have gone one color, but again, they don't come like that. And so this is gonna be our foundation of risk management. So from here, we're going to add on to this little block. Now, again, we talked about risk management in our last section. We're really good about that. Kind of it's our first building block. And we have our first wall. So again, I could have made this color coded, but again, it's a free class, so it is what it is. This is going to be our first spot. So when we get done today, we have our foundation. We're going to put our first little wall there. Now, again, we're going to have 3 times the size because we also have technical, fundamental, and mental analysis. So when we get done, we're going to start building this Lego house. It's going to be really, really cool as my cat gives himself some scratchies. With that being said, let's discuss realistic goals. So the first thing to mention is supports and resistances. Let's go back real quick. Let's chart them together real quick and look at some goals we can go from there. Let's check it out. So this is URA. It's a really nice uptrending stock here. First thing we're going to notice is our supports and resistances. So we've talked about this at length, but once again, old supports become new resistances and old resistances become new supports. On horizontal, ascending, and descending plays, this applies. So we can see some nice resistances, some nice supports, and we can see constantly this resistance becomes a support. This resistance became a support, and it's not perfect. It could have been a little bit higher. This gap right here, boom, becomes a support area as well. This resistance over here, this whole area, these triple tops right here, becomes a nice support. This resistance right here became a support, and this is now acting as our top resistance. So we can see some really nice definition here. Again, the main goal with horizontal plays is to have 3 or more hits, and the most important part with these ascending, descending plays, supports and resistances must be clear. So as we move into our next section, which is writing a trading plan, again, setting some goals on always identifying and only playing stocks and only having plans that are set with supports and resistances that are very clear is a great goal to have. We also discussed how supports and resistances become channels. And again, let's cover that for some goal setting real quick. This is JDST. What I want to focus on is the price action over here. This is a glorious, beautiful horizontal play. We can see many supports and resistances. So let's go through and find some. That's a support. This was a support. This was a support. And again, I'm looking in the middle all the way across. It doesn't have to be perfect the first time I go through. I like gaps. So this is a nice gap area. See how that was a resistance, support, support, resistance. Gaps are great for that. We have another gap right here. We also have a nice resistance about here, support right there. Boom. We go through this really nice and slowly. Take your time. It doesn't have to be perfect the first time. So many lines there are. We're not going to keep all these on here. Go through it nice and slowly. Boom. So now we have some channels. This is a lot. Okay. I would never have this made for a real play. But if you were to be able and you can consciously play this, that's totally fine. What we're looking for though is through all this price action we see, support to resistance, support to resistance, all the way up it hits a bunch of supports and resistances and ends perfectly. See this wick right here? That's a bit problematic. That's a nice move. That's a nice move. And we can see constantly all this movement besides here is almost perfectly support to resistance. Now again, that's quite a lot of support resistance lines. I wouldn't have them in a normal chart, but again, it stays the same. We're trying to have as many 100% moves from support to resistances. So I think realistically we can clear this. That's what you would do if you really wanted to be technical. I would definitely find our major one. So that's a major one right there, right about there. Again, it breaks and that's fine. This right here was a major one. That's fine. That's a major one there, and that's a major one. And then up here, boom. That's 5 major ones. Again, we can see clearly a full move, and then we can dictate a full move from here all the way down. That's a full move down, right? Full move up. That's not perfect. That's okay. Perfect. Perfect. Love that. Perfect. We can see constantly, boom, a little bit off, a little bit off, a little bit off. You can see it's not always going to be perfect. You can always add more lines and subtract more lines, but again, there's plenty of good 100% moves. I'd put one probably there to get most of these moves out. You probably put one here as well if you wanted to. And that's probably about all you need for supports and resistances to make channels. So again, moving into the next section with goal setting and into maker and trading plans, when you're trying to set goals for supports and resistances, 3 hits as always, but again, the goal also is to make channels. If you can make moves from support to resistance, resistance to support, you'll be much more successful in charting and technical analysis. We then discuss trend lines. Trend lines are the same exact thing as supports and resistances, but at an angle. Let's look at one more real quick to make sure we know what we're talking about. I know we've done AB before, but again, it's such a beautiful uptrend. I love using it as an example. We can come down here to the bottom, always come all the way to the right, extend it out nice and long, bring it up. Whenever it hits the first time, unclick, boom. Again, this is a fine trend line and playoff, but we have some issues. It does hit 3 times. It's very close, but it does hit 3 times. The issue is it's only hit those 3 times in about 8 months. You're not going to want to have a stock on your watch list to make 10% every, 2 months or so. It's not going to be realistic. What I do is I add different layers and different channels to my trend lines. I'll show you. So this is what's really beautiful about this. You have 2 options here. The first, again, you can make a different color. You can just use this and redraw as a channel. You can come up here as what I usually do, hit more lines just like that. We have once, twice, 3, 4, 5, 6, 7, 8, 9, 10 times it survived now. I would take 10 over 3 any day of the week. And again, this is not a perfect science. You have to use your own, your own kind of technique to it. I usually do no more than 4% for the whole channel itself, but this is a great way to get more hits and to give you a zone to play off of. Again, I don't think that supports and resistances are lines. I think they're going to be zones. Same with trend lines. Another great thing you can do is you can just take the line that you have, make it the color that you like, just like before, and then you can duplicate it. Duplicate, you can bring it up, maybe a little bit, like that's a good move right there, and then do one more. Duplicate it and move it up one more time. So just like with our supports and resistances, we used to have this with the red line, yellow line, and the green line. The same thing can be applied to the trend line as well. What's a really cool tip for you, if you want to have these kinds of plays, you don't want to watch this is a nice secret that I like to do. I make 2 or 3 lines that I like. The top one, right click on it, create with an alert. So you're drawing, when it crosses below this trend line, create, it'll go off. This way, the charting's ready to go for the trend line. Have your supports ready as well and everything drawn up. But now instead of watching 200 to 400 stocks like I do, I just get an alert for the trend line hits off and I know it's ready. What's really nice about using 2 or sometimes even 3 lines is the risk involved. You know that at the top line here, we've had 1, 2, 3, 4, 5, we'll call this 1, 5, 6, 7, 8, 9 hits, and 9 times it's been successful. That's great, but again, this will not last forever. It's a good way of getting into the trade, but again, it's a good way of also managing risk. You also may want to look at the second line, once, twice, 3, 4, 5 times. So half the time it goes lower. So you have options now. If you know that 9 out of 9 times it hits the first line and 5 out of 9 times it hits the second line, you can now determine your kind of plan and your trading plan from that. Let's check the third line. We have once, twice, and that's it. So 2 out of 9 times it hit the bottom line, 5 out of 9 times the middle line, and then every time that top line. So again, if you want to do something like scaling in, which we'll talk about, putting like half or 1/3 of your investment at the first line, the rest in lower, you can do that. You can also have a high alert line, so it hits that first one, you don't buy it, but you're just on high alert. All these great things come from this. It's a really good strategy. Moving forward with trend lines, I think your main goal has to be setting up your edge. We've discussed this at length in that whole entire lesson, but again, what is your edge gonna be? Trend lines have to be a part of it. for your risk management, for your goal setting, your trading plan, for macro markets, for consistency, and for all the three different types of fundamental analysis, technical analysis, and mental analysis. Having an edge is very important, and trend lines build right into that. If you want to move forward into our next section of a trading plan, think while you're doing these charts that you want to do, how are trend lines going to be part of my technical analysis, fundamental analysis, and mental analysis? Think about entries and exits, and again, the goal should always be just to get a little bit better every single day. Practice trend lines, find what you like, you'll become much better every single day, and that's the goal. We then discuss volume profile. There's a few main shapes, but again, let's review some shapes and some common things we're going to see. So this is core. This is the charting that I have for it. It's just the volume lines and support lines. I have some price targets here. We'll discuss these in the future. The volume profile, as we can see, is a big old fat D here. A D, a capital D, is just like a big old mound, right? It's literally like that. It's gonna look kind of like this, right? It's an actual D like this. That's a great way to play off of a stock. If you have a high volume node, you have two options when you go into it. The first is this. We know that our high volume nodes will be supports and resistances. We have mainly three. 1, 2, 3. We'll go with 4 here, I guess. We have 4 nice ones here. As we can see, it does a really good job of giving us supports and resistances. What's important with a capital D shape is in the middle or towards the middle is where you're going to go from bullish below to bearish above. And when you're above it, like up here, this is more bearish action. This is more bullish action. So again, the higher you get in the D, the more likely bulls are going to be losing power and bears gaining power. The lower you get, the stronger bulls are, the weaker bears are going to be. So that middle threshold of a capital D is going to be a really good indication that half the move is over, or that you're kind of getting near where bulls need to keep buying in or bears will take over. It's really good for planning your entries, planning your exits, and planning off of capital Ds. Let's look at a capital B shape to show you another example. So this is VFC. We can see over here we have 2 capital Ds, right? This is a nice capital B. This is 2 Ds right here. So as we can see, we have some high volume nodes in here. We also have 2 capital Ds. So what can we do? We know that at the bottom of a D is a great place to buy in because bulls are more likely to be strong. So now we have 2 possible entry points, and again, plenty of supports and resistance to look at. Let's check it out. So looking at the shape here, we're not going to look at price action and cheat. I'm not about that. Let's just take this. Supports and resistances, that's a support. Right there, right there, 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 there. We'll go with those. Let's come back and look. We can see it's not perfect. All right, it's pretty good though. We're missing this gap here. That's fine. You can see a lot of wicks coming into here. But again, plenty of supports and resistances based off these high volume nodes. And we know at the bottom here, so anywhere down here, and down here are going to be good buying zones because it's the bottom of a D, which is really, really good to buy into. So you have plenty of options with the volume profile. Moving forward, again, I would just turn it on every single time you're charting. Put the 70% volume lines, put the POC, that's a gravitational force and very strong support and resistance, and I would start to recognize shapes that you like. You're recognizing capital Ds and Bs, Ps, lowercase ds, whatever they are, whatever shapes you like. Go back and watch that lesson again if you need refreshers. But again, moving into the trading plan, volume profile and traditional volume should be a part of it in every step of the way. Next are some patterns. Again, I think your edge or your trading plan and what makes you better than 50% on entries, exits, and succeeding is going to be pattern recognition. You're never really going to have true convergence or true success with convergence without a trading plan that has patterns built into it. Let's review a few of them and see what we can find. So this is WBA. We played off this on my channel. We're very successful with it. Let's just look at this area right here. This is a very, very pretty pattern right there. We can come over here, take our trend line, come on up. We can come through just a little bit. That's okay sometimes. Just like that. Boom. Look at that. Duplicate this bad boy. Come to the top here and see how perfectly it lines up across the board. Now again, it's not perfect right there, but that looks really good to me. We'll make this a resistance. We'll make this a support. Look at that. Right here, this whole way up was a really, really beautiful channel up. Channels are huge. And again, as always, we can take our old resistances. That's going to be a support area. That resistance became a support. This resistance in this whole area is becoming a support. This old resistance right here became a resistance still over here. So as we can see, even on upward channels, a pattern like a channel up gave us some kind of clue what's going on. So resistance trend lines, supporting trend lines are really good for giving us some idea what patterns are going on. Let's check out a few more. So this is 5 and FIVN. As we can see, the bottom here come all the way over. We can see it hits quite a few times just like this, making it channels before to get more hits. Look at that. It's like 4 or 5 hits gorgeously right there. Our resistance trend line has to have 3 hits. As we can see, it does cut a little bit, but this is very obvious lower highs, which we talked about is a bad thing, but we do have higher lows. So we're having a triangle forming. With this triangle wedge forming, again, you'd like to see these peaks be higher. You want these to be up here and really show some life. But again, we have full clarity here. The foundation of technical analysis is risk management and taking reward when it's smart to and cutting when it's smart to. Resistance trend lines with patterns show us that. FIVN is a great example. You may want to hold until 195 or 205, right? But given this resistance trend line, we know if we were to make a move up about 10-11% and hit this, we should be on high alert to get out, or at least secure some profits and be on high alert to exit if it does dip. So traditional resistances are obviously there. If you go back and look, there's a resistance right there. But again, just with the trend lines and the patterns, we have more clarity. Let's do one more. This is PLAB. We also have, again, no supports and resistances, just trend lines along, which I wouldn't usually do, but again, it's very nice to have this as a tool. We have our nice trend line like this. Let's duplicate it, move it up. We have some good hits right about there. One more, let's duplicate it and move it up. It's right about there. So again, we have 3 great lines coming in. You can try and find a resistance trend line. For me, this is a wedge. We can see almost all these lines come through just like this. You can make this a resistance trend line just like that. That's fine. We have a nice ascending wedge here. Again, you'd love to see some bigger moves up, but again, now we have these resistance trend line here. We have this pattern. We now have very good clarity. We're coming back down. My play here, right click, create alert withdrawing, crosses below this, create. Next time PLAB comes down this area, I'll be on high alert. We did call it on my channel right over here. The next day moved up about 10%. Again, we were looking at possibly 7 or 8%. And again, we'll get into risk reward later on, but this is a really nice looking pattern to me. So moving forward with your edge and your goal setting with technical analysis and patterns, I would just double check the kind of patterns that you like. If you're super new, if you're a real new noob in a greenhorn, find one pattern. Again, horizontal channels are probably the easiest to read, but you're not going to have as much convergence because there's no trend lines with horizontal channels. Ascending channels are really easy to play off of, but again, they're a bit harder to draw out, but you will have more convergence. So again, go off what you like, what you're used to, but abusing 1 or 2 at most is a really good goal. Get the one down, really abuse it, get the second one down, really abuse it, and learn 2 or 3 patterns. That's really all you need. If you want to do descending wedges, ascending wedges, horizontal channels, head and shoulders, all these kinds of things as a beginner, you're going to find it really rough to really be consistent. I gave this analogy earlier, but it's like sports, right? Does a quarterback kick the ball? No. Does the goalie go ahead and do free kicks? No. Well, you have to get good at one thing or 2 things. I would definitely specialize when you begin. Your goal here should be to abuse 1 or 2 patterns with technical analysis, really get good at them, and then move on to more. Second to last is historical data. Now I'm going to show one example for this, but again, what can you do to become more precise with historical data? Let's look into it. So this is my current charting for Apple AAPL. We have an obvious lower highs, obvious higher lows, POCs right here, and supports right here. I'm watching for an entry in real time. 6/3/2021, I want an entry right here. What I can do to make myself better is 1, how far are the lows between each other? From here to here? That's a good chart right there with the screen thing there. 41 days from here to here. 124 days from here to here. 20 days from here to here. 43 days, 5, and 16. It's fairly mixed up, not much information there. Our tops though, we can also do this. 32, 20, 24, come down here, look over here, 33, 14, 44, 26. So we're averaging about 30 days, 25 days for peaks. The bottoms were not very useful because the trend line was so strong. I wanted to use that, but we can see 20 to 30 days for the peaks is where we usually see another peak form. With that information, we can see from here to here, it's been about 28 days. That's fine, but now with this information, I should be planning the next peak to be about, from right here, about 15 more days. So about 2 more weeks, given this history of data, to see my next peak. Again, that's not perfect, but it will help you identify some really good opportunities on some stocks. Let's check out some more historical data. One great one is to measure how long it takes for reversals. So from bottom to the top, how long does it take? We have obviously right here to here, 11 days. From here to here, 9 days. From here to here, 7. From here to here, 11. Here to here, 11. And we can already see 8 to 11 days from bottom to top. That gives us another great identifier that if it takes 8 days from bottom to top and top to bottom by 8 days, that's 16 days. That's very close to our 25 to 30 day narrative with consolidating periods involved. So again, you can also give yourself that kind of edge of being like, all right, I have this kind of capital. My goal is to make this much money in X amount of days. Given Apple's history from bottom to top, it takes about 11 to 15 days. I can now calculate if that fits my plan. If so, if not, and go for it. My goal for you moving into the next section of writing a trading plan is just to go back and look at these mild things, right? How long do consolidation periods take? Do we have higher lows? And if we have higher lows, how long does reversal time take? From peak to peak, how long? From bottom to bottom, how long? These mildly boring things that no one thinks about can really give you some great light and some great intuition. Because if it takes 4 to 3 days usually to reverse, and you're on day 9 of a reversal, you may get a bit worried because that's really out of character. So again, those types of things can really shed some light on you. Then moving into the next section, your goal should be to always check historical data of a stock. Even for 3 to 5 minutes, it's all I really need. It sheds a lot of light for you. The last thing I want to talk about is convergence. Again, convergence to me, in my system, you can throw in indicators, which we will, but it's supposed to be supports, trend lines, patterns, and the volume profile. If those 4 things can come together all together well, you'll have mightily more success, because with convergence and whatever you want to take from me and put into your own system, it's to take 1, 2, 3, 4, 5, up to 10, 20, whatever indicators or style that you use, all these things coming together at one point in one area where we can say, hey, there are traders out there who buy off of support. We're at support, that's great. Hey, there's folks who buy off of volume profiles right here, that's great. Folks like patterns, the pattern of the support trend line is right here, that's great. The trend line is right here, that's great. All these things, 4 or 5 things build up, all those groups of traders buy in, you're in a day or two early, you'll have mightily more success. Let's take one more chance to look at Apple and I'll show you. So I said I'm in real time looking for an entry on Apple, and I was not lying, because look at, we have a clear trend line coming in. This golden trend line is right here. That's one form of convergence. We also have a beautiful support area. That's 2. We also have our POC, which is a very strong support right here. That's 3. We have an obvious pattern. It's a big triangle. That's 4. So we have 4 layers of convergence off price action alone for us to enter. Now if I throw on EMA lines, vortex indicator, stochastic indicator, throw in an RSI, all these types of things, you can get 6, 7 layers of convergence that really gives you some great insight. And again, the goal of convergence isn't to buy in or sell, it's risk management. When you have such beautiful layers behind you, you can easily identify risk zones, reward zones, and how much money you're risking to get what you're gonna get. Let's use Apple again real quick. So moving forward, if I'm gonna buy into Apple, based off these indicators, if this does break down below all these things, I can just get out, right? Because we have lower low here, we have our trend line, all this stuff. If this all breaks down to about 122, I'm just gonna get out. I'm risking 1.27% for this trade. What's the reward gonna be? Realistically speaking, if it does make a small move to a resistance trend line, that's a 2-to-1 play. Our trend line would make it almost a 4-to-1 play, just right here. So again, we have great clarity because of convergence. We have a resistance trend line, we have all the things supporting us, and from there we can make smaller, smart decisions. My goal for you moving into the next section is to identify convergence, find out what kind of convergence you like, what indicators you like. If you like support, do you need the POC there? Does the volume profile lines need to be there? What's most important for convergence to you, and when it works for you, when it doesn't work for you, jot that down, chart that. But goal-wise, again, convergence leads to risk versus reward. That's the main goal, risk management. So moving into our next section, why don't you take a few minutes and reflect and think, hey, how does technical analysis lead to me having a better edge? And then 2, how does writing a trading plan, again, go hand in hand with technical analysis? Now we're going to look at some great things. The lessons coming up are indicators, drawing loading zones, take profit zones and stop loss zones, talk about how you buy in with convergence, choosing the proper entry point, types of orders we're going to use, what if you bought a winner, what if you bought a loser, and validating and scaling out, which is a huge problem for some people. What you may notice after this lesson 19 is a possible lesson 19.0, 0.1, 0.2. I want to leave myself some room in case I really want to add things that there may be a 19 and a half. So again, if you have another lesson after this that is not about indicators, that is why. With that being said, let's do this real quick. Here's our risk management, right? Let's pull this up real quick. So here's our risk management. This is our foundation right here. This is 1/3 of the technical analysis, fundamental analysis, mental analysis blocks. We're going to take that, put it right here. Off brand. So you can see right now, our price structure is just like this. Now we're missing 3 2/3 of walls and we're missing a roof. But again, what you're gonna do moving on is take your system, your beautiful little system, whatever it may be, and you're gonna take it and place it inside of your structure. Again, there's absolutely no structure in the stock market. You must design your own. And that's the point of this course, is to design a stock system and a stock market structure. So far, we have the foundation being built and worked upon, and we now have 1/3 of wall because technical analysis is officially done. Congratulations. Let's move on into making a trading plan, which again is very technical analysis heavy, but again, it's more on a planning side, not really charting side of everything. With that being said, barring any extra lessons at the end here, y'all, let's look at indicators. Thanks.